The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at this time, 11 o'clock till noon, Eastern that is, and 877-927-6646, number to call. Let's go straight to the numbers. Thank you to our host. Great shows earlier on, and we hope to keep that going all the way through today, Tuesday today. Voting here in Massachusetts, important. And of course, we've got Andy Hecht finishing up at TFNN at 6 o'clock this evening. So full house we've got right here. Dow's up 174 at 16,690. S&P's up 22 at 1955. The comp index is up 68 at 4,626. The VIX is finally back down into the 18s, 18.98. Great, down $1.57. Made a big deal about that for subscribers. That's why we are long. Actually, we're very long at this particular point. Let's go on. We've got, let me run these. I'd like to run in sequence. We've got the QQQ series up $1.85 at 104.35, making a leg E in the daily, A in the weekly. Let me get rid of this here for a moment. And the monthly chart, this is going to be really important. If in the month of March, there is a trade that goes above 104.80 was last month's high. If we can see the QQQ series, the power shares, the QQQ Trust series, go to the 105.30s, then all of a sudden the 106.35 9-period exponential moving average becomes a target. Very interesting. IWM been lagging. Let's see where it is right now. Leg C. Daily, whoops, sneeze coming. Excuse me. Leg C. I have to actually now put an up arrow because I should have done that before. This says to me that there's a good chance in the Chapman wave methodology that all the indices will go, thank you, Terry in the den, it will go to a from the 93.64 low of the 11th of February. It will go to a leg D, the IWM, and if the IWM is able to get from 103.78, $1.05 higher now, into, I'd have to say if it could go right there, about 104.65 in the next, this week sometime, then the 9-period exponential moving average of 105.76, that weekly support that just got smashed when we came tumbling down the week of January the 8th, that's going to be resistance. The monthly chart needs a lot of work. So that and the New York Stock Exchange, NYA.X. Yeah, the New York Stock Exchange monthly also needs quite a lot of work. However, what's really important here is that the low that was made on January the 20th at 89.37, let me put that in here, 89.37, the low that was made February the 11th of 8,944, just like the Dow was higher, 894, just like the SPY was higher. The SPY was higher by 9 cents. The cash index went below by 2. So this is going to be very important because here as well, ABC, we're in fact in leg D right now. When you're coming off significant lows, yes, of course you can go to a D. Do you recycle? That's the big question. Do you go to another buy mode in leg D? We're actually in leg B in the weekly chart. This is terrific. New York Stock Exchange is improving. A lot of work needs to be done to be able to get to the 98.46 200-period moving average of the weekly chart. However, this is a really good start. Now let's get to the nitty-gritties of gold. Gold has had a spectacular move. Right now it's about at 1234.70. I've already drawn in for some time, been looking at this flagpole that makes a kind of an H formation in a rectangle pattern that comes back. It either tries to get to the previous high in an A, inside buy mode going peak A, peak B, peak C in the 120-minute chart. Well, it's already done that. And then there was that aberrational move yesterday that went to a G, and now we've pulled back quite sharply. But this is exactly the kind of pattern we're looking for, and it's been very difficult. I've been having some questions from subscribers saying, hey, we've had some really nice positions, but how come you haven't got into... how come you just didn't get into the gold? Well, we tried to get into the gold, the gold index at one point. I can't remember if we just got stopped out for a minor loss or a minor gain, but we never got back in. I kept trying to go, and then I left it alone because we had, we had a gold stock that was doing fabulously well. It's hit our stop, and then it continued rallying sharply, and we never got back in. And I've been looking at this and saying, gold needs to pull back. I know this pattern so well, the cup formation that makes a second cup formation. And unless there's a decisive break with the close well above the previous high of the 11th of February at 1263.90, this is a difficult time to get in. It's saying two things. One is gold has been finding buyers and doing beautifully. Some of the gold stocks are doing fantastically. But as a risk reward, there was anytime this week I could have said, hey, start a position here, but it's really just a nibble. It's just to be in the thing in case it goes higher, and at least you're in a gold. But the way I'm looking at it, and the way I'm looking at the dollar, and even silver, I had a choice today. I could have said, look, let's buy silver in a pullback because it should play catch up. I don't think it's going to happen right at this moment. Let me explain why. And this is just my thinking, because who the heck knows for sure? You can't. You can just do your technical analysis and say, look, the dollar has had a move a little bit bigger than I anticipated. This is leg D. I thought it would stall just under 98. We didn't have a position. I was just looking at it, and then it just kept going. And the reason why I thought that was that the 97.90s at the 9-period moving average of the weekly, it was such a sharp move down, such a sharp bounce back, that to make a V-shaped recovery really requires a lot of energy. It essentially says that there was an aberrational move. Two bars I don't understand. One I can, but two I couldn't understand for the slump that occurred the week of the 5th of February in the dollar contract, and then followed through the following week on the 12th to the 95.24 low. But then there was a fabulous turnaround, and now we're in leg D. The MACD's at 90%. The MACD's expanding still. Stochastic's at 90%. I have one indicator that says just a little bit of resistance coming up here. How can it handle it? Well, I like what's going on in the dollar. So I just feel nonplussed. The gold should have pulled back, and it didn't. It's holding beautifully. Something's going on that's in the gold area that is different to any other time in years now. But at the same time, just the natural breathing of a market says gold should be pulling back, and the GLD should be coming back to about, it's at 117.88. I would not be surprised if it tests 115 to 114-ish area, maybe even a tad lower. We'll see. But at this point, I have to step back. I'm not going to. I just don't feel that it's worth getting into gold now, because any pullback would say that we're coming back to where you just entered. So I'm prepared to step aside. We've had some real nice trades, although I did try to get into oil this morning, and we lost out there. So let me see what the oil's doing. Oil right now, CL. Crude oil is down. It's at down 12 cents at 33.62. It's really struggling here to do something. I'm a little surprised. And we've done the dollar, we've done bonds. Oh, as we go to the break, bonds are down. The TLT is down $1.97.
It's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So let's just get back to a couple of things here. So crude oil, I'm not sure. Crude oil should move. That's all. All I can say is it should move. We took a 1.2% loss on the actual the index itself. I don't know what to say. I think that, yeah, look at this chart. If I can find it right here. Oh, no. I went and hit the wrong thing. All right. What was I looking at? Yes, and SPY. So here we go. Look at this chart. Oh, no. Messed it up completely now, huh? Format. Call it SPY. And then we're back again. Here we go. Look at this. Close. The green is the USO. No, the green is the SPY. 5 minutes chart. And this green is the green is SPY and red is USO. So finally it is working, but it's not working as well as I thought it would. I think it still will, but anyway, we're out. So high-grade copper is holding quite nicely. It's made a leg B in the weekly chart, and that's a positive short term. So I had a couple of questions. Let me get to those questions right now. First question, Dow's up 212, S&P's up 27. The first question, and the VIX is down at 18.71. First question was, would I look at, is that FEB? Oh, the February. The February. Okay, let's do this because we're closing out the month. And I said the moment we close out the month, I'll be looking at something differently because I'll have a candle to work with. And the candle that I'm looking at in the Dow, one of the reasons why we went so long over the last couple of days and back, and then today added even more, is that the Dow closed, even though you can see it's just barely there, it closed above the close of January. So the January close was 60,466.30. And yesterday's close was 16,516.50. To me, that was important. No, what am I talking about? Yes, correct. I just saw this candle. I thought, where did that come from? That came from March. Today's candle. What a beautiful candle. What this particular pattern says to me, and I'm basing it on the Dow, which is the best index because the others all made lower lows. You've had a series of rising highs. You made a 15,370 August low in the Dow. You made a 15,450 January and a February 15,503, modestly higher, but higher. And we've started to close nicely higher in each month. And now what's really important is that if in any week there is a close, this is just a week, I'm looking at the monthly candle, but it means on any week, if there is a close above 16,795.98 in the Dow, it should say that the 16,994 9-period exponential moving average could become a target to the upside. Okay, I'm done with that. Let's look at the SPY. I'm going to the SPY because a lot of people look at the SPY rather than the S&P 500, that is. The SPY didn't close. It went, the close in January was 193.72. Yesterday's close was 193.56, a fraction below it. Boy, it was looking good. My analysis yesterday was that the last hour selling was funds just reconfiguring their portfolios. Why? Because the intraday action was really pretty good. Now, if I'm looking at this with today's action with their SPY up 204 at 275 at 196.21, what I'm really impressed with, now it's 28, what I'm really impressed with is that we've started off the month, whereas we could have started off the month down, and that would have turned the weekly chart and the daily chart into quite a negative pattern, because if you close the week, and then all of a sudden yesterday you have an intra-week, an intraday move that doesn't take out the weekly high of 196.68, and instead you close down under the 9 EMA any day that week. That starts to say to you, hey, whoa, we're looking at resistance, and now I have to wait for a leg B extension. This way, with a very nice move up, it suggests that within a day or two, by today or tomorrow even, we should be at 196.69 in the SPY, and that'll be new leg D. F/D, doesn't matter, I'm calling it D. And one of the things I've discussed, I might even have to have a workshop on this. Why did I use this low at 181.09, whereas the previous one was 181.02 in January? Why did I say that there's a chance that we've restarted, that yes, this could be D, with a recycle, in fact, turns out to be an instant restart, going to a new leg up? Why would I even consider that? Well, there are a couple of reasons. One is that the stochastic pulled back sharply, the MACD pulled back sharply, but it's the price that almost took out the left side low. And my experience, this is just based on experience, is that a lot of the time when my original concept in the CD called Introducing the Chapman Wave Methodology suggests that if you go all the way back very close to the beginning of the start, that is the starting ictus low that gave you the buy signal that looked like it was going to a buy mode, normally I say just restart. And then there was a period where I said, no, I've had too many experiences where you can actually continue the count. But there's a certain configuration that says that if the H pattern, the lowercase h, goes to a cup formation and it does it in a certain manner, there's a really good chance that you've started a brand new buy mode and the buy signal that's going to go to a buy mode. So I've still kept the parallel counts, and all I'm saying is going to make it really, really easy. Yes, the S&P, and the other thing is that the S&P made a lower low. I better just do this right now because I'm getting some questions. SPX.X It made a lower low. It went from 1812.21 on the 20th to 1810.10 on the 11th. So that has no choice. That's a C minus, and this becomes a C. And now we're going to go to a D. And that's the other reason. There were so many cases of just nicking the left side low, but with great takeoff. I call it a takeoff phase. Remember, I made a big deal about the takeoff phase. I showed this chart to subscribers. I showed this here in the den. I showed this to viewers. I said, this is the pattern I believe we're in, not this pattern right here. Whoops. This pattern, the W pattern, where the lowercase h succeeds in starting a brand new accelerated move to the upside and decisively takes out the left side peak. We haven't quite got the confirmation yet, other than the MACD and stochastic are really good, because we've only gone from 16,510 to 17,795, and there's still the archish pattern. I would have preferred if the speed took it from here at 16,664 with just 1 day rest or even no day rest and just powered right up into the 16,700s. That would have looked closer to that. So, yeah, the jury's out a little bit, but I'm going to call it leg D if the Dow goes to 16,796 and the SPY goes to that, what did I say it was? Well, it goes to a new high, a new recovery high. Basil Chapman, I'll be back straight after this break. Dow's up 220, S&P's up almost 29 points.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Just wanted to check out if you can see the screen that I just gave here of the question to you. Okay. So I had a question here. Let me just make that clear before that the S&P, the S&P and the spider both will go to leg D if there's a move above the high of the 26. In the S&P's case, 1962.96, and we've got a high so far today of 1961.36. So it's got a little way to go. That's that, and it'll be very important that if that happens on a weekly basis, I want to see a close 1 week above the close of last month. That's okay. I got that. Now, the next thing I want to do is here, I had a question about the XLF. The question actually was, where would you short the XLF? Short the XLF. I had answered the question. I don't remember if it was yesterday or the day before. I think it was Julie that asked about the JP Morgan. And what I said, I didn't like JP Morgan, but I did like the XLF. I liked it better. And the XLF is in leg D. Very quick move, A, B, C, D. So it says the MACD and the stochastic are really very positive. It says there could be a little bit of a pullback, not a major sell signal, just a little bit of a pullback in the next day or so. But that's probably going to be a buying opportunity. I'm looking at this really closely. And now let's go to some other areas because I believe that we're looking at a chance, just a chance right here, that the bearishness that I've been seeing and the bearishness that was displayed yesterday at the close is in fact going to be overcome as the rotational correction and the rolling recession takes on different areas. And we're going to also see how the market handles politically. Today should be a fairly conclusive look at this part of the process, of the election process. I'm going to just go into this just for a moment. This is purely tactical, got nothing to do with how you vote or how anybody votes. I'm just looking at it as personalities. I'm going to continue to include the fact that Hillary Clinton and Bernie Sanders are the real 1%ers. Now, what do I mean by that? I mean that they are the ones that if you had to retire tomorrow and you had to rely on a guaranteed income, because a pension, especially a senator's pension, especially with their health care, etc. Remember, in the whole health care debacle, I kept saying all they need to do is say whatever the public wants and accepts, the Senate, the Senate and Congress have to do exactly the same. Whatever lay people, whatever health care we have, they have to have. You remember? Oh, you remember how that was just shuttled and bypassed really quickly? These are the real 1%ers. Don't listen to what they say. When they talk about the 1%ers, of course, the billionaires are 1%ers. I mean, how can you even argue with that? But it is the myriad of state workers all around the country that are going to receive money. I'm not talking about whether it's deserved or not. Maybe it's very well deserved. It's got nothing to do with the issue. The issue is when we're talking about 1%ers, these are the people you try to get 40, 50, 60,000 a year when you're retired. Let's call it after tax, and tell me how much money you need to have in the bank. I'm not saying whether you've got property, you've got every other things that you can get income from. I'm talking about guaranteed income. That means you've got to have a guaranteed treasury or whatever it is, because if that capital is going to depreciate, it ain't guaranteed. Those are the 1%ers. And the reason why I'm making a big deal about it, when you listen to the politicians, remember, if they're waving their hands here, always check to see what this hand is doing. If they're waving that hand, always check. When they point your finger that way, always look that way, because the sleight of hand is the name of the game. Okay, got that out the way. And that implies, the other thing is, why isn't Sanders saying, I'm going to commend one of my opponents for self-funding? After all, isn't that what he's talking about? He's talking about no encumbrances, no payoffs. Isn't that really one of the ways to do it? Of course, then you're talking about billionaires self-funding, of course. Do you want a whole series of billionaires coming along to self-fund? You can get anybody under those conditions. Well, it's very interesting. These are questions I wanted to pose, and they directly relate to how the market responds tomorrow, because we're looking at the chance that there is, at least for a period, going to be a sense of clarity on both sides. So this is going to be very important. There could be something that happens that the market responds to tomorrow. That's why the higher we go today, and it's really important to be monitoring this, the higher we go today, the safer we are in the sense, well, for us, we are long indexes, etc. Because I want to have some cushion if there's a negative reaction tomorrow. That's all. So 16,796 starts leg D in the daily chart of, this is what I show my subscribers every day, and we're long, quite long actually, the Dow, and we were looking at this really closely. Now, what's really important, look at this. Look what's happened. You've got the VIX index down at 18.50. That shows buying intensity. You've got the 120-minute Dow chart holding very nicely, and in fact, having a high-level consolidation. You've got a potential leg C. Oh, wait a minute. I think we just did it. Oh, going to a leg D. 1962.96, and so far today's high is 1962.55. Whoa, just 40 or so cents away from going to leg D. The Dow's a little bit behind. It's got more to catch up. And my Trin index has just given me a flash to say that within 2 days we should see a sharp move up in the futures that gets carried over into the cash indices. All right, enough with that. Now, I wanted to do this. So the question was, I went for, let's see, who was that? I went for Bob. Was it Bob? Yeah, I think it was Bob. Yeah, Bob, what about the monthly charts? I went to the monthly charts, and I'm going to also just do this really quickly. IWM, it's very important that the IWM in a monthly basis, because it's lagging, and this is the thing that hints to me and says, be careful, because at some point we could have a pretty darn sharp sell-off, but will we hold the recent lows or will we break it? That's the issue. But we haven't gotten to the point yet. That point will come in the IWM. I think I said it just now, and if the IWM is able to get to the 105.70s with the 200-period moving averages, that's about the place where we're going to have to start looking to say, is this where we start the reversals back to the downside to make an arch formation in the weekly chart? But so far, I love what's going on. Now, I was asked about my Dow quartet. General Electric has just started leg C up. And that's really important. A leg C at 29.66, up 53 cents, up $1.80, 1.8%. Nice move up. Very important that it participates. But this is what's important. It's a leg B in the weekly. IBM has to go to a leg D. Triple M has had a fabulous move and needs leg D. And UTX had a spectacular move. A very sharp pullback today. Oh, we'll talk about that. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's up 229.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back. I keep forgetting to do this. I know I do it during the break so that folks in the Tiger's Den keep seeing the charts, but I kept meaning to do this from way back. Look how the 10-minute E-mini held the 200-period exponential moving average. It went to a G, pulls back, trough A, trough B, trough C, and then bam, goes peak A, peak B. And the left side, right side price time match took out the high in a quicker time. So this is leg C in the 10-minute chart, and it's above. This is the cup, Chapman wave cup and ladle pattern. Let me show you right here. Chapman wave cup and ladle pattern. And that says if you take out the left side lip in a shorter time period, no, not a shorter time period, in a shorter notation, in other words, a B or a C, that means you should go to a D and then come back and retest the lip, which is at 1956.25. That's a pretty deep pullback, but that's what it says. So we should still go to a D before any kind of retracement occurs. The 1-minute chart as an alternate count, I'm suspecting it's a C and it should go to a D, and then we pull back a little bit. But really nice. It's like investors, like fund managers, are just grabbing. Now they feel that they've lost out. So I said, I'd look at UTX. Well, this is the Chapman wave cup and ladle, and this might have failed because it went A, B, C, D, E, F. Okay, it's a G. That's all I can say. It was a G, didn't go to a D, C and a D. And that's very unusual, but that's just what happens. I'm calling it, at least for now, there's no reason why I shouldn't call it a G. And the MACD is still pretty good. The stochastic's still pretty good. I don't know why it capped down. Maybe it's earnings or something. I don't know what it is. But anyway, UTX gapped down after a spectacular move to 100.55 on the 26th, 27th pulls back under the 200-period moving average. Oh, there it is. So then there's the pullback, and now it's gapped down. So a fabulous move on UTX's part up, and now it's consolidating. Maybe there's just news that the takeover is not going to happen, whatever it is. So out of my Dow quartet, you can see how strong they've been. Okay, that's out of the way. Let's do the next thing. A couple of questions. Yeah, thanks for correcting me. So that's, well, first of all, okay, yeah, so Judy just confirmed that's what I was suspecting, and it's the whole deal with Honeywell and UTX. And then Julie wanted to know, she says, 34 resistance Monday and Tuesday, and now down on the day. Should we sell crude oil position? By the way, USO, they debit in fees, especially before rolling to new contract, so not the same chart as crude oil. Could you look at Brent crude? I don't think I get that. Is that a BZ? Did I see a BZ? I'll give it a try. I might have to just spend a little time trying to get these things. Oh, there it is. Yeah, okay, so there's the Brent, and I've got it on the very close contract. I'm sure I should be going to the next one. I'll just do this for the moment. This is A, B. It should go to C. Brent should go to... I like the action. I like the action on USO. Now the USO is just about where we got in. It had a sharp pullback. I do think USO is going to go higher. So I believe that the crude oil is oversold. We were long a half position at 916. We got out at 905, something 1.2% loss, and now it's doing exactly what I wanted it to see. That's okay. We've got plenty of others that are doing well. Now, when I'm looking at this, I have to tell you that when I'm just going to go to the continuous crude oil contract. That to me is a little bit safer. So this is a peak C, and crude oil needs to go above 34.69. It's really not the daily that I'm interested in. I'm interested in the weekly, and if crude oil is able in the next, it can't be a week, it should be by Monday the latest. If it's able to get to $37 to break out of this resistance area, I would be saying to you, crude oil finally is giving the kind of action, is demonstrating the kind of strength in the MACD that I really like to see, with a stochastic showing a rally that's been going on even as it was making lower lows. But it's just one step at a time. And we can't even think of the monthly chart until you can start to see trading in the 40s. So the first real area that I would suggest to you is going to say oil has made a turn that could be fairly significant in terms of weeks and maybe even a couple of months, rather than the 2 days, 3 days, 4 days, and then bam, lower low, would be if it can go to the 37s. I hope that answered your question there. Next question I had was, GT says, the SPX rally to fizzle, like the 20th of January? And then would I look at EEM? No, I think this has legs for now. It's just for now. But the reason why I want you to get in, the reason why I was upset that our position that we got in at 48 in the UDOW 3 times long, which was so fantastic, and we did take a great profit, but it was perfect because I wanted to hold it because there was a chance that we could have turned the corner for an even longer rally time-wise. But we're back and everything's okay. So what can I say? So EEM. Now, I haven't looked at this for years. I know I've looked at it for years, but we haven't been in it for years. The EEM is the iShares Emerging Market ETF. And what's really important about this, and I just want, if you don't mind, I want to send in question marks to my engineer, because I don't know if anybody has called, because I don't know if I've got the right screen up, but if you can answer the one that I just sent. So this is the EEM trading at 31.27, up 95 cents, and it's gone to a leg A, then a peak A, a peak B, peak C, a peak D, and this could be the start of something, but I'm calling it an E for now. Oops, E. And in the weekly chart, that's the most important. It's gone to a leg B. It's gone to leg Bs before and failed. So this is going to be very important. Why? Because we've just started off the week. This is just the second day of the week. But look at your IM. I can't look at my IM. Something's going on. So just text it into here, right into the den there. Okay? Text it here. I'm not sure if anybody's waiting for me. I'm sorry. If you are waiting, I just don't know. Okay, so EEM is acting very well on the daily chart. Monthly chart looks horrible, but it's a good start. So I'm going to suggest, if you're interested at all in the EEM, you could start a position here, even though it's an E/A, and I would only start the position, even if it goes higher. Why? Because of the weekly chart says, hey, we've only just begun the week. We could easily retest 30.50s, the 9-period moving average. Start it, and I'll look at it again in a day or two, and then say, okay, now we can get a better feel for it. So nibble right here at 31.26. The stop, I wouldn't even really have a stop now. It would be more like $1.50. I don't think you're going to pull that back $1.50 just yet. So yeah, $1.50 stop at this particular point. Just starting it. Okay, we've got Jerry in Boston. Jerry, I'm sorry. How are you?
Yeah. This is just a quickie because you're talking about UTX.
Yeah, but it must be something about the deal that's not working.
UTX, Honeywell made an offer to buy them.
Yes.
And the stock spiked up.
Correct.
And this morning, Honeywell said, "I give up," because UTX has fought it adamantly and said that there's antitrust stuff, and we're not going to go along with this. So this morning, Honeywell dropped the bid of 108 on it.
Wow. So that makes the Dow's move of 243 points up even more impressive because it hasn't got
well,
UTX.
Except Honeywell is up.
Yeah, but it's not in the Dow.
Right. Oh, it's not. Oh, that's right. Hey, nice call on the market. Take care.
Thank you very much, Jerry. I appreciate that. And we'll be back with Ben Tallahassee. I'm sorry, Ben. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Okay, in this last segment, this is what I want to do. I wanted to cover a couple of things here. In the when I went through the Investors Business Daily this past weekend, it's funny, I get the electronic one, but I have to buy the paper. I don't know what it is. I'm trying to be with it into the 21st century, and I think I've done it in many cases. But when it comes to newspapers, I like to hold the newspaper. I like to look at it. I like the serendipity of your eye glancing somewhere that it wouldn't have glanced before. But I'm looking at this, and it's got a completely different look to it. I mean, why would stamps.com be number one? STMP. Look at that. Made a leg D right as we're speaking in the daily, leg D in the weekly, leg F, maybe slash A in the monthly, but the leg D, everything about it technically in the monthly is very good. The weekly says, okay, we could be getting a bit of a pullback very soon, but this is remarkable action that we're seeing, the whole rotation thing. So this is what I'm looking at here. Let's go to the volatility index, VIX.X. And folks, if you really want to learn about how to use volatility, how to use these different mediums within the marketplace, the next show, the swimming lesson with Think or Swim, I mean, they are just fabulous. So they tell you how to use the options, how to just assess the market, how you can get some predictability in your earned income or whatever. Oh, don't forget Ben. Ben, hi, Ben. Oh, my God, I almost forgot Ben. Ben, how are you?
Good, Basil. I think I got a fairly quick question. So,
yes,
I called a week or two ago regarding the XLE.
Yes.
And I know you got a great memory, so you probably remember that. I know I won't. But we talked about the trough D in the month.
Correct.
I've also just noticed.
The trough D in the weekly chart. Yes.
Yeah, a trough D, I think, in both the weekly
and the monthly. Correct. Yes.
So I pulled the trigger on the ERX this morning, and with the daily looking pretty decent, it looks like we may be in for. Are you thinking a decent run on the energy?
I think this rotation is going to allow this market to go higher a little longer than people think. And if energy really kicks in, you see your ERX, if I look at the XLE, folks, look at the left chart here. It's the daily, the middle is the weekly, and the monthly is on the right. Here we go. See, the XLE has just a slightly better look to it than the ELX, but they're really very close. Oh, was it EL? What did you say, E?
ERX.
ERX. And then ERX, I like it. I think that there's a chance that it could move higher. This is Energy Bull 3 times shares. It should look exactly the same, but there's a slightly different look to it. But it's really very slight. My eye picks it up. But most importantly, what I would like you to do is follow it close. You're in it, right? So
yes.
Follow it closely. If it starts to pull back to 17.90, then you've got to be a little bit careful, because that says it needs a little more backing and filling to test that whole 17s area. What you want to see is by Wednesday afternoon, Thursday at 2 o'clock, the latest Thursday at 2 o'clock, it must be challenging the candle of the 26th of February at 1929. ERX trading at 1878, up 75 cents. I think your entry is good, but it now needs performance. It needs to break away from all the resistance you can see in the 120-minute chart. It needs the MACD to expand so that the histogram in the 120-minute chart opens up, and you've got the fast-moving average way above the slow-moving average. So that's the way I'd look at it. It needs speed right now. If it just meanders to the side, I'd say, whoops, you're going to have to wait for the thing to actually kick in. I think you've got a great entry point and a great opportunity here, because if it does suddenly spike above 1929 in the very short term, I think it's going to have a kicker and really push quickly into the 20s.
Yeah, good. Thanks a lot, Ben.
I hope that helps you. Thank you so much for calling. Congratulations, Ben. So this is Basil Chapman. Very nice action here. Dow's up 254 on this first day of March. I think we're going to go a little higher. I think it's going to surprise people. And we'll see how the election results hits the market tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.